Hi everyone, Alex Roy here again, and welcome to another edition of Market News. Last week, I explained one of the primary incentives to first-time homebuyers, namely currently low interest rates. In the previous episode, I compared the total interest paid on two 30-year fixed-rate mortgages, one with an interest rate of 3.75% and another with an interest rate of 6.5%. As we saw in both cases, the total interest paid over the life of the loan was significant, with of course the loan with 6.5% interest rate being much higher. So this week, let's start with the knowledge that when you take out a $300,000 mortgage at a fixed interest rate of 3.75%, that will be over 30 years, the total interest paid over the life of that loan will be $200,165. Yeah. You're not crazy. That's a lot of money. So why would anyone borrow that much money knowing that they'll be paying that much interest? Well, first and foremost, we need to recognize that home ownership would be nearly impossible without this sort of lending system in place. Interest is simply the necessary cost of borrowing. And for most, the benefit of owning one's own home is worth the expense. But on the other hand, and this is particularly true in the current marketplace, homeownership can be considered a wise investment, and here's why. Let's take the following as an example. We find a home we acquired at a fair market value of $350,000. We're able to put down $50,000 as the down payment, leaving the remainder of the cost to be financed with a $300,000 30-year fixed-rate mortgage with an annual percentage rate of 3.75%. Under these conditions, after living in the home and making mortgage payments for 15 years, we will have paid $141,728 in interest. That is money that's going straight to the lender and is not considered equity in the home. But wait, don't homes appreciate in value over time? Yes, they do. Sure, the market can fluctuate from time to time, as it did in 2008. But over an extended period of time, houses will consistently increase in value. One of the best indicators for this is the S&P Case-Shiller Home Price Index, otherwise known simply as the Case-Shiller Index. If you need to know more about it right now, take a second, go to Google, pause this video first, go to Google, Google it, we'll wait. Okay, you back? Right on. So if we look at Portland, Oregon's index, over nearly 30 years of data, it's clear that home values have increased at a fairly consistent annual rate of 4.07% per year. At that rate, in 15 years, our $350,000 home will have appreciated an additional $286,724 in value. So if we contrast that against the interest rate we paid in the same amount of time, we still come out $144,996 ahead. Now, to be a bit more fair, let's remember that to see that sort of appreciation on par with the average, we'll need to maintain the home. We can't let it just go to waste. According to most authorities, homeowners should expect to spend approximately 1% of the home's value on maintenance costs per year. In 15 years, that would come to a total of $56,339. But even with these maintenance costs deducted from our appreciated value, we're still $88,657 ahead. That's $88,000 over and above the $110,000 we'll have paid down on the mortgage, which is pretty much the same as sticking the money in a savings account, as opposed to spending it on rent, which is simply money going to somebody else. So this has been a very simplified look at interest that's paid on a mortgage and home value appreciation. There are many more factors to consider when determining if it's better to rent or to buy, but I hope that this short example has piqued your interest. To that end, I encourage every renter out there to check out online rent versus own calculator to determine if it's more fiscally responsible to rent or to own based on your individual circumstances. One site I find easy to use and it looks great is www.smartasset.com. Also, for more information for shopping around for the right mortgage, I encourage every first-time home buyer to check out the wonderful guidelines on the Consumer Financial Protection Bureau's website, consumerfinance.gov. Thanks so much for watching, everybody. I'm Alex Roy, working hard for your success.